Well, hi everyone, and welcome to the bi-weekly EcoInvestment update for late February, February 22nd, 2023, actually 2015. And of course, the market went roaring on to a new all-time high, and I do mean roar, on Friday. That market, it was muddling around the old all-time high at 18,000, and then on Friday, boom, it just took off like a rocket. Well, as you know, I sold half of my positions off last week, and some people have asked me, well, what positions did you have, blah, blah, blah. You know, I'm not a registered investment advisor at the current time. I used to be in the past, but one thing I don't want to do is talk about specifics about individual investments, because if the stock market is in a bull market, most things are going to rise. Okay, if it's in a bear market, most things are going to fall. So if I'm talking about being in the market, I'm talking about a broad index fund like the S&P 500, SP SPY on the New York Stock Exchange, or the Russell 2000 something. Just a broad, simple diamond, Dow diamond, 30 stocks that mirrors. DIA is the ticker symbol that mirrors the Dow Jones Industrial Average, composed of the 30 stocks. The point is, I don't want to get down on this channel to picking specifics, because I don't know about your needs for income, your speculative bent and all that. I just like to make money. That's what I like to do. Now, having sold half of my positions, I'm now at a point with the market having hit a new all-time high, where I'm looking for any kind of really steep, reaction, maybe someday when some bit of news breaks out of somewhere that's temporarily bad, and I want to race in at that point and get some new positions on. I'm very happy with the way this market's been going, because one thing I've been green and then two yellow cautions. I've never been red or negative on the market, and I still am of a belief that the only thing that's going to stop this market is rising interest rates. Well, my friends, the reason I went to yellow and the reason we got to be careful is interest rates are on the rise, and quickly. You remember 2 weeks ago, everybody was in a dither because the market was weak in there. We had a really bad spell, and interest rates dropped all the way down with all the trouble in Europe and Greece and blah, blah, blah. Bad reports out of China supposedly, and interest rates just went down to like 1.66% for the 10-year note. 1.66. Well, 2 weeks later, guess what, guys? We're at 2.12%. Now you might say to yourself, big deal, 1.6 to 2.12. Well, it's a big deal in percentage-wise, because that's a 28% move. That's a 28% increase in interest rates in 2 weeks. That's a huge move. So we want to be careful in here, okay? Now, to my way of thinking, when is the party going to be over, really? The party's going to be over when the Fed raises interest rates 2 or 3 times, something they've been kind of scared or hesitant to do because they're nervous about, if interest rates go up, the housing market's going to slow, and we saw a huge drop in mortgage applications and things. People are very sensitive to minute changes in interest rate. It's not like it was in the 70s and 80s when you had to have 17% for a mortgage, and now 9% feels great. Man, if it moves from a 3% to a 3.75 for a short-term adjustable, or 4 to 4 3/4 for a 10-year, or 4 to 5. I mean, we're talking about big moves that people are very, very sensitive to these days. So I think we're still clean and green. We have a lot of factors that are offsetting in here. So I will be looking to continue to re-add some nice positions here on any kind of broad market weakness. I think we still may have the very best to come with huge up days and just stuff that just grabs the headlines and just makes people scratch their head and say, wow, and today's wow turns into tomorrow's buyer. So yeah, exciting times could be ahead. As you guys know, from all the way back in October of 2013, I have been green on this market since the upper 1300s. in my opinion, we still got a long way to go. We're going to keep an eye out on the interest rates and stuff. But any kind of announcement from the Fed that's interpreted negatively by the market, we actually want to be in there buying at those times. The market might have a swift break, because the reality is talking about raising interest rates and doing it are two different things. So the Fed might jawbone, but it's only action that I care about. And it's going to take more than one rise to jolt me off of it. All right, have a great rest of your February, and I will see you in March as we cruise towards spring. Thanks for being along, everybody.